Good afternoon, everyone. It's 5 to 3 on Wednesday, the 26th of August. The American market has been running for 25 minutes, and the Dow's off a few ticks. The S&P is up a few ticks, and all the measures of the trend on VectorVest are up. The short-term trend is up, the longer-term trend is up, and that longer-term trend has been confirmed by price action. The advances and the declines are pretty much the same. I want to look very quickly at the VectorVest composite. This is a composite index of all of the shares that VectorVest follows in the USA, some 8,000 shares. And that's the crack in February and March, this is what the market has done. I think if you'd asked a questionnaire of any of us at these lows, we would have not said that this was going to happen. When it's time to buy, folks, you won't want to, and when it's time to sell, you won't want to. This market is pushed up, as you know. The SPX, the S&P 500, should I say, has made a double top plus, and the Nasdaq is above that top. This wider measure of the market, all 8,000 shares, hasn't quite got up there yet. But as you can see, the buy-sell ratio is not keeping up with the party. And this divergence, that's known by technicians as a bearish normal divergence, can last for quite a long time. This one's lasted a very long time. And it can last much longer yet, but sooner or later, folks, this market will reverse, and I think that we're probably going to have quite a good 6 weeks ahead of us, maybe more, up until the American elections. But if I put on the longest term measure of the trend, I'll go to a 6-month chart. That's the sell-off. And this is the last long-term measure of the trend that kicked in May. If we were to get one of these long-term signals to sell, which is preceded by this level of divergence, then yours truly will be running for cover if I haven't run for cover already. So I can't, in fact, emphasize enough that that would be a very serious situation. The best that we could hope for in that sort of situation is that we get a nice orderly pullback, and that pullback, if I can put up my fib, that orderly pullback would be somewhere down around here to 61% of that, or even 78% of that. And clearly, if this is a rally and a bear market, it can fall much further than that. So just be very careful if you do see one of those signals. However, for the moment, the trend is good, and it's a good time to buy shares. But this market is extended, folks. That's the intraday action. That's a half-hour chart. It's one of my favorite charts. This is the overnight market, and yesterday was pretty easy, folks. And I'm hoping today is going to be easy as well, although the money's far from being in the bank. The market pulled back to that last old high. That's what I call a sweet spot. And that low, those lows were 62% of this, so there was a confluence of fib and the old high. And those of you that know a little bit about Elliott will see that on this run up there was 1, 2, 3, 4, 5 up and 3 back. And folks, if all you really need to know about Elliott is that if you see a 5 wave up and 3 waves back, that's good. In other words, the 5 waves is impulsive, the 3 waves back are corrective, and it should go again. Markets pulling up, pushing up here. I couldn't resist a trade this morning. It's not a very good spring setup. I'll show you a better one in a second, but I couldn't resist a trade here this morning, and after that 30-minute bar, I am long it from 46, and the stop is still under that 40 level. Well, let me look at my notes. The stop's at 39, and I'm up 3-4 ticks here. We shall see. We shall see. I haven't brought the stop up. I think I would be tempted to bring the stop up to entry if it gets to 56, and the target from this would be about 67. Let me show you how you get the target. We go to the fib retracement, and you pull a little fella down to here, and if we go up, we can see that the 1.618 extension is at 34.68, and that's my second target for an intraday trade. I'm doing a little bit more intraday trading than I've done for a very long time, and that's largely because I'm not traveling. All our VectorVest work these days, user groups, etc., is done over Zoom or GoToWebcast, so I've got a little bit more time on my hands for that, and enjoying it. The market's been reacting well, so let's see what happens here. I have no idea. The market cannot be predicted, ladies and gentlemen, on a trade by trade basis. Okay, over 30 trades your edge will kick in, but on the next trade, if you've got a hit rate of 80%, that means that you're wrong 20% of the time. On the next trade, you don't know whether it's one of the 80 or one of the 20. That is the reality of the situation, and our objective is to have the presence and the awareness to make good decisions when you don't have all the facts. Okay, and that takes a little bit of testicular fortitude. Let's look at the American market. Let's look at what looks good. If I go to viewers, that's what I'm holding. I'm holding far too many. There's no doubt about that. But some of the positions that I've got don't take a great deal of maintenance because the stop loss is at entry, and I've pulled the stop loss up behind the market at the VectorVest stop loss. That's the case for Hortons. That's the case for Square. That's the case for Lulu. That's the case for Coop. That's the case for Microsoft. That's the case for TTD. Now, the rest of them are newer purchases, and AMD I bought this morning. Okay, we shall see what happens. eBay, I've had it for a week or so. I can't quite remember. Coop has come very nicely today. It's gone sideways for a while. It's moving quite nicely. And the one that I'm worried about today is ADSK, because let's just have a look first of all at AMD, have a look at eBay, have a look at Autodesk, have a look at PINS, and have a look at MSCI. So let me chart those, folks. And there we are. And as you can see, you all know that if I'm trading something myself, I use bars. So that's AMD. I couldn't resist buying into this somewhere up around there. There's my 21 and 55. Sometimes I put them on, sometimes I don't. I was doing something for a client this morning, and the client felt happier with the 21 and the 55 on. I do as well, except that I've been looking at the darn things for so long, I know exactly where they are. This thing is stopped at that old high. There is a target up here somewhere about 100. We shall see. My stop loss is down below that low underneath 80, so let's see how that goes. If the general market goes, it'll go. If the general market doesn't go, it won't go. That's eBay. Into eBay for a few days now, and it's pulled back on me a little bit. Stop loss is not at entry. The stop loss is still at the original stop loss. Folks, when I've made as much as I've risked, I normally take a little bit off, get the stop to entry, do my best to let the second half run. That's the case with all of those shares that I spoke about a moment that don't take a great deal of management. That's Autodesk. And if I blow this up a little bit, maybe to a 3-month chart, I bought this down here at that sort of level in the spring level, and it went back to the spring a few times. I could have bought it there, but it wasn't on my radar there. But I noticed it somewhere about here, and the stop is already at entry, and the market's coming close to that. Now, just remember, if you bring your stop to entry after taking a little bit off, as much as you've risked, only about 40% of them, according to my notes, actually go and turn into runners. The last period with the momentum in the market has meant that over the last, 2 or 3, 4, 5 months now, many more of them have gone on to be runners. That's abnormal with the momentum in this market. Nevertheless, a little bit of this banked. If it gets down to about here, which then I'll be stopped out on that. That's quite a savage pullback today. There must have been some news. I haven't got had the time or the focus to do this. Now this is Pins, and Pins has just charted one of my spring formations. Not a great spring, but nevertheless a spring. This is a much better one because the market came back to that last old high, went up, couldn't make a new high, came back and then reversed, and then it sprung on huge volume, folks. So this is a setup. Now yours truly actually bought into this here based on that outside day, and it ran up here, didn't quite make as much as I've risked, or at least I didn't react to it anyway, and I'm still long of this, and my stop loss is down under these lows. So that one's still working, and we shall see what happens. Not a great deal of volume here, folks, not a great deal of volume at all, so we shall see. And that's MSCI. It's pulled back, and there was a really cool setup here. I spoke about it in a video some weeks ago, a confluence of a trend line, an old high and a fib. Broke up very nicely, and it's now consolidating, hopefully on a way up. This is wave 1, this is wave 2, and we've got a nice wave 3 in front of us. So that's what I've been doing, folks. The newest setup today is AMD, and I'm hoping that that's going to move. Now another quite interesting share that I haven't bought, but I'll just add it in here. I haven't bought it, okay, so it's Zoom. And Zoom, in fact, is due to report next week. The technical position looks exceptionally good. Where are we? It was up $5 today as well. I should have bought it, but didn't. It'll keep. And if we have a look at this, results are out next week. That was a spring for down there. As you can see, it came back, kissed a couple of times, but on this occasion went right down, took out all of these stops here. That's without a doubt a liquidity drive. The 21's above the 55, that's a prerequisite. Just remember, I get questions from people asking about the 21 and the 55. The 21 and the 55 is not a timing technique. It just tells me that the trend is up, that's all. And the market then pulls back into this zone between the two of them, and then you need to look for some form of getting in. So once, if you like moving averages, once the trend is up, i.e. the 21's above the 55, you could then take those off and use the 3 and 8, for example, for an entry. I don't do that. I find the 3 and 8 difficult to see. That's just me being stupid. So that would have been a great place to have got in, but nevertheless, this market came back and it kissed these highs. Can you see that, folks? And there is a level of resistance running across here, and it came back and kissed that exactly and was bought up strongly yesterday. I think that if I can muster up some more cash in that account, I've got too many positions that ahead of the news this looks very strong indeed. So I buy now underneath, stop loss underneath that low. Not a great deal of volume. It would be great to see today on a big volume day. So I haven't done anything there, but it looks quite good to me. This is a one-off situation. I can't remember markets being as strong as this since about 1999. The big difference between now and 1999, this was brought to my attention last night in the Taunton user group, is that in 1999 the momentum shares that were rising were not making any money at all. In fact, there was nothing there. There were figments of merchant bankers' imagination. But the shares that are leading this advance, and I don't need to name them, the Apples and the Googles, etc. of this world, all of those shares are actually making really, really good money, and well-established, strong companies. So that is completely different. The question you need to ask yourself, folks, is Apple is without a doubt a great company, but is it a great investment at this particular price? I'm not a good enough fundamental analyst to answer that. I'll leave that to your own deliberations, but all I know is that there's strong momentum in this market and that there is money to be made as a swing trader. So manage the risk well. If we spent as much time managing the risk as we do on entries, we'd all be much, much, much richer. I hope that you found this useful, folks, and I'll do another one of these on Friday where I'll look at the UK market in much more detail. On the UK market, I haven't changed anything since last Friday. Okay. Thanks very much indeed.